Oh, yes, good morning. The position at the moment is the property market. We're seeing two types of transactions. Overall, transactions are down by about 20%. You've got those who are needs-based, who are those that need to move for death, divorce, family reasons. And then you've got the opportunistic buyers, which is really the cash buyers. So those that are wealthy enough and in a position to be able to buy cash clearly aren't attracted to mortgage rates right now. So they're using their capital and buying property outright. But it's a small, I would say it was a smaller section of the market. There aren't a huge amount of cash buyers.
Yeah, and I was going to ask you about the well-known cash buyers. Let's be brutally honest about it. Vast swathes of central London, prime London, are owned by Asian investors, Chinese investors primarily, Middle Eastern investors, historically Russian and Ukrainian. But I'm just wondering how the various concerns in various regions, Middle East apart, because oil still seems fairly well bid at the moment, but certainly out of China and Russia, are we seeing a lot of the traditional cash buyers from overseas disappearing?
I wouldn't say we're disappearing. I mean, it's quite interesting because we still have a lot of people from abroad who see London as good value, particularly London. The currency exchange rates have still, I know the pound's been stronger recently, but it's still relatively looking attractive to some overseas buyers. The only thing that has perhaps slightly impacted the market is the borrowing costs, because a lot of people who do buy from abroad will still use debt, perhaps for tax planning reasons.
Simon, so what do you think the impact of another rate hike this week will be on the market that's already been just battling the headwinds from the higher credit costs that we've seen already?
I think it's already baked in. I think everyone is expecting perhaps one more rise. We know that inflation has been stubborn, but the mortgage rates have been falling despite the Bank of England rate still ticking up. And I think we're going to continue to see that trend as long as there's no more world events that impact the overall picture. We are seeing mortgage rates slowly falling. I don't think the Bank of England will need to raise the rates much further. And indeed, we might then start to see a very slow decline over the next couple of years. I think the main thing really is that mortgage rates aren't going to change much. We are in a new norm and people have to, unfortunately, get used to it.
Simon, what jumps out is how uneven the property market is. Various parts are still supported. I mean, we've seen even on the back of the COVID trends, people moving out, wanting more space. So those parts of the market outside of the main city areas still have had a lot of movement in recent years versus, say, flats in central London that haven't moved as much. I can just talk us through what areas that you think are still supported this rate versus others that are just under pressure.
Well, I think actually it's the country market that's more under pressure right now. We have seen significant price rises in the country since COVID, and London hasn't actually done a great deal. And I would actually say that London is standing up better to the current economic conditions than the countryside is. So we're seeing bigger falls, not big fall in house price, not for big falls, but we are seeing the regions falling back faster than London.